All right, let's get right into it. There's a massive power play going on in the crypto markets as we speak, and honestly, most people are missing it. So in this explainer, we're going to pull back the curtain and decode exactly what's happening, piece by piece. You can think of any market, but especially crypto, as a kind of battlefield. On one side, you have the bulls. Their betting prices are going to go up. And on the other side, you've got the bears, who are betting it all comes down. Right now, these two armies are in a total stalemate, and it's creating some serious tension just below the surface. And this quote just nails it perfectly. When a market is split right down the middle like this, it's not resting. It's a coiled spring, just winding up tighter and tighter, storing all this energy for one huge, explosive move. The big question is, which way is it going to break? So the key to figuring out what's coming next is to look past the obvious headlines. There's a silent power play unfolding, and it's all hidden in the data. And that's exactly what we're going to do. We're going to decode it together. Okay, first things first. We need to take the pulse of the market. How do we actually measure what thousands and thousands of traders are feeling all at once? We need to gauge the market's heartbeat. The main tool we use for this is called the long/short ratio. It sounds complicated, but it's actually super simple. It just shows you the percentage of traders who are long, meaning they're betting the price will go up, versus the traders who are short, betting it's going to fall. It's like a direct snapshot of the market's mood. And here it is. This is that coiled spring in data form. Just look at these numbers. The longs are sitting at about 49%, and the shorts are just under 51%. I mean, that margin is razor thin. It shows a market that is completely locked in indecision. Neither side has control. Now, this is where it gets really interesting. When we break this down by exchange, you can see on Binance and OKX, the traders are leaning just a little bit bearish. Fewer than 50% are long. But then you look at Bybit. It's the only one where the bulls are actually in the majority, even if it's just by a tiny bit. This hints that the traders on different platforms have slightly different psychologies. But here's the deal, and this is absolutely crucial. Sentiment is only one piece of the puzzle. The really savvy traders, they never ever rely on just one indicator. They're combining this sentiment data with price charts, with on-chain data, and with what's happening in the bigger economy, like what the Fed is doing with interest rates. You need the whole picture. So if market sentiment tells us what everyone is feeling, the trader's toolkit tells us when that feeling is about to turn into action. Let's take a look at the indicators they use to spot when that spring is about to uncoil. Two of the biggest tools in the box are the MACD and the RSI. They both track momentum, but they do it in different ways. The MACD is all about measuring the strength of a trend, while the RSI, that's more like a thermometer, telling you if the market is getting too hot or too cold. Let's talk about the MACD for a second. Traders are on the lookout for one specific event. It's called a golden cross. Sounds dramatic, right? Well, it is. It's when the main MACD line crosses up over its signal line, and it's basically a big flashing sign that upward momentum is picking up speed. The RSI, on the other hand, works on a simple scale from 0 to 100. If that number climbs above 70, it's a sign the market might be overbought. Basically, it's getting overheated and could be due for a cool down. And if it drops below 30, it suggests things are oversold and a bounce could be coming. It's all about spotting those extremes. So here's the real pro tip. Expert traders don't jump the gun on a single signal. They wait for something called confluence. That's the magic moment when the MACD, the RSI, the sentiment, and maybe a few other tools all start telling the same story. That's the real signal that a big move is coming. But markets aren't just about data and charts. They're about people. They're about psychology and stories. And that brings us to the narrative machine, the huge role that influencers play in shaping how everyone feels about the market. And it's not just random hype anymore. The really successful crypto influencers have a whole playbook. They back up what they say with data. They break down complex stuff so you can understand it. And they don't just post once. They build a whole story over weeks, using visuals and history to build trust. It's pretty sophisticated stuff. And they use these powerful little phrases. You've probably heard this one a million times. Whales are accumulating. It's so simple, but it acts like a psychological trigger. It makes retail investors feel like the smart money, the big players, are buying in, so maybe they should too. And of course, these stories don't just spread by magic. They're amplified through this whole ecosystem of hashtags. When you see hashtag Bitcoin or hashtag bullish, those aren't just labels, they're broadcast channels, beaming these narratives directly into the mind of the market. Which brings us to our final, and maybe the most important piece of the puzzle, the algorithm, the code that controls the conversation. Because it doesn't matter how great your story is if nobody ever sees it. To understand modern markets, you have to understand the algorithm. Take a platform like X, for example. It's basically a 4-step factory for your feed. First, it pulls in about 1,500 tweets it thinks you might like. Then, a neural network ranks every single one. After it filters out all the junk, it mixes in some ads and serves you your timeline. It's a machine literally designed to keep you scrolling. Okay, now this is the secret sauce right here. Not all engagement is created equal. Not even close. A simple like, that's your baseline, that's 1x. But a reply? A single reply can be worth up to 27 times more to the algorithm. That's why everything you see is designed to spark a conversation or even an argument. And the boosts don't stop there. Using native video gets you a 2x boost. Being verified gets you up to 4 times more visibility. But here's the ultimate cheat code. Replying to the comments on your own post. That can act as a 150x multiplier. It's basically you telling the algorithm, hey, this conversation is important. Show it to everyone. So after all that, we're left with a pretty big question. In a market that's driven by data, shaped by influencers, and amplified by algorithms, who's actually in control? Is it the trader with the perfect chart? The influencer with the most convincing story? Or is it the code that decides what we all see in the first place? Definitely something to think about.